Beautiful. So in terms of this, just to go a little bit more in depth with um, the imbalances, right? So with the position that we took today, obviously, we were looking at shorts. So one thing to really note is the way that I like to keep my charts simplistic, obviously, to make it not too confusing for people that are getting into markets. So that's why I don't really do as much. But realistically, what my eyes saw when we took this
Are you
position,
sharing your screen? I can't see your screen.
cool. That'd probably be a good idea to share my screen. Right? So essentially, what I see, right, is this liquidity. So that was something that already, like, I didn't have to mark that up necessarily, to be able to just have that as a first target. So with just the initial position that we took, right, getting in here, I think it was like a 20-point stop loss, right? First target was really just in this insufficiency, right? So
Yeah.
obviously last week we kind of went in depth with structure. So structure wise, right, if we sit here and we look at it, right, on the 5 minute, right, we close below. Just to me, we close below like just any previous 5 minute buy would have been kind of validated. But in my eyes, this right here
Yeah.
was that area that when we broke above this previous high right here with this drive up, you can see that we got this little wick down, then we drove higher. So just understanding that this right here would have been that area where it's like, okay, we once we see a break below there, all we want to see is retracement back up, which we did see all the way back up to here. So it was cool that we got that retracement literally right at the beginning of the call, um,
Yeah.
and it basically just fell right from the time that we got it. But one thing to note, right, on the downside, the reason why I targeted this area in particular is because notice how when we sit here and we look at price action, let's say over here. So let's focus our attention on this white clear box. So notice price in here. We're getting buying and selling candles, but notice how it's like there's wicks, right? So it's a little choppy, if you would. Like it's not necessarily just going straight up. It's not necessarily going straight down, but it's creating. This is what would healthy price action would look like, right? But what starts to happen in here, right? Notice how before we were kind of getting this up and down sideways movement. So realistically, it's like up until this point, right? We're slowly walking down. Insufficiencies that we fill, right? We fill one right here. So there's an insufficiency in between these two candles. There's also an insufficiency up here, right? There's one even higher up here. But it's just noticing how sometimes we'll come and fill some and we'll leave others. But it's like the reason why we left it is because sometimes
Yeah.
we're gonna reverse, right? So people kind of get hesitated. So this is why when it comes down to imbalances, you really just only want to pay attention to the ones that are in those areas of that last down push before we broke above. So when we see this insufficiency get filled, you can see that we push down lower, right? But then in here, right, within these candles, we create insufficiency on the 5 minute. And if now we go to the 15 minute, to me, if we kind of narrow it down a little bit more, in my eyes, we could chalk down the insufficiency to here. So to me, I'm not really paying attention necessarily to anything before this down candle,
Yeah.
before the up move. So to me, just this whole area would be where I would be looking to target. But if you watch that video with the institutional candles and then you come back and watch this video after, basically what you'll figure out is this is actually an institutional candle down here as well, right? So we have this insufficiency
Mhm.
here, but realistically, all of this price action is insufficient all the way up here. So that's why it's like I had like a bigger area marked up, but realistically, when we chalk it down to the 5 minute, the insufficiency in my eyes starts there,
Yeah.
and goes all the way down to here, right? So when we see price, for example, right, initially we come and notice how we just avoid that initial imbalance, right? So we don't quite dig into it, and we just foop impulsively. You see how it just starts to, like, we get a little bit of reaction, right? Where we went from slowly walking ourselves down to foop, we get this little pop up, right? So
Mhm.
this is kind of where price, this is where traders will kind of get trapped, because they'll sit here and they'll be so into the smaller time frames, not realizing that on the 15-minute time frame, right? If we just even rewind it back to here, right? On the 15-minute time frame, we create this insufficiency in here from this wick to this wick, right? And the reason why that's insufficient price action, the reason why that's an imbalance, is because what that shows us is during this period of time.
Hold up, you're cutting out.
Can you hear me now? Can you hear me?
Can you hear me?
Yeah, I can hear you now. Can you hear me?
Okay. Yeah, I can hear you.
Okay, perfect. So essentially, the reason why this is insufficient is because if we sit here and we look at it on the 15-minute, you can see that if we look to the left, right, notice how even here when we created insufficiencies, created imbalance in here, notice how we came back and we filled it, right, before then continuing lower, right? Even in this area right here, right, we had an insufficiency in here. When this
Mhm.
wicked up, it filled it, and then boom, it dumped. So it's like there's smaller insufficiencies that will be getting filled. But one thing to note is, okay, if we look at this from the 15-minute time frame, right, all of this is healthy price action leading down, right? The reason why it's healthy
Yeah.
is because it's not just big impulsive bodies, it's wicking. So that means what the market is doing, it's creating a healthy price action that is allowing price to continue pushing. What's slow is going to grow, what's fast doesn't last. So typically what's
Yeah.
fast is going to be liquidity, what's slow is going to be overall the move. So we sit here, we look
Yeah.
at this from the 15-minute time frame. Now we dig it down to the 5-minute, right? So if we look at the 5-minute, right, there's not so much of an insufficiency no more. But now if we go to the 3-minute, it's like, okay, cool. Now we could really chalk it down to really still in the same area, right? So we have an insufficiency in here on the 3-minute. Dig down to the 1-minute.
Mhm.
Now it's like, okay, what we have is this little mini
Weak.
institutional area. So realistically, in terms of entry point, right, for a re-entry, right, let's say you missed this first initial entry with a 20-point stop loss. Now you could have got back in, let's say, with 12-point stop loss,
Yeah.
and you would have been targeting about the same risk to reward, so about a 1 to 6. So looking at price, right, on the 1-minute perspective, you can see it digs in there. 3-minute, we can see it fills, and then now on the 15-minute, you can see that this insufficiency is filled. So ideally, the higher the time frame, the
Mhm.
better. So it's like the fact that we fill this on the 15-minute,
Yeah.
like that's a plus, right? Because now that gives us the okay to continue down. So think about filling the insufficiencies as, like, are you familiar with like any type of sports, like, or like,
You have to be soccer. I'm really bad at basketball. Or I don't know if you guys play rugby.
yeah,
I think it's an Australian.
yeah, rugby, yeah, rugby
Oh,
was
you
big.
guys play rugby?
Yeah, my school is fucking good as fuck at rugby, but so if you understand soccer, think about this in in the perspective of, in soccer there's offside, right? So it's like you can't do certain things. Like you can't just
No.
stand behind the last defender and just cherry pick basically. So think
Yeah.
about the algorithm fill as being onside. So it's like what you have to do is just make sure that you're lined up with the last defender, and what this is doing is lining up with the last insufficiency. So it's kind of,
Okay.
and in that perspective, you have to look at it as it just needs to align in order for it to be fair, right?
Yeah, yeah.
Because let's say it is offside and then you score a goal, the ref's gonna blow the whistle and be like, look at
Let
the
it go.
point at the linesman. The linesman's gonna have his flag up. He's gonna be like, offside, like you're offside right here,
Yeah.
like. So now that we look at that, it's like another perspective you could really think about it as is think about it as it's a drawing, right? And basically what we have to do is we have to connect every area where there's just no price, right? So if we don't
Yep.
have necessarily buys offered in here in this
Mm-hmm.
insufficiency, because basically what the insufficiency is, that means there is no buys really offered at all in this area. So there was little to no buys. So in order for us to correct the insufficiency, what we have to do is we have to go back and we have to buy in an area where we previously did it. So I know that might
Right.
seem like a little confusing, but in
Makes sense. Yeah, it kind of makes sense.
in simplistic terms, basically think about it from the perspective of when we like even here for example, it's like we have this imbalance right here, right? But notice how we don't quite fill it all the way with this wick. So it's like
Yeah.
we create this little space. Like you're gonna start to notice it a little bit more. It's just gonna be spaces in the market. So there's gonna be a space here, then you're gonna see a wick. Like pay attention to where wicks go because you're gonna notice like even here if we're looking at it from the flip side, this is an insufficiency that we had before we pushed up. So notice how we push down. We push a little bit
Yep.
below the insufficiency, but notice how as soon as we fill that, we boop pop back up.
Yeah.
So there's
Okay.
there's imbalances and insufficiencies everywhere, and that's why the area that we were targeting that was essentially that. So when we look at price now, let's say we played this re-entry, right? Initially we can see, all right, cool. We come down and we fill most of the insufficiency.
Mm-hmm.
So notice on the 15-minute, boom, we tap that perfectly. But now if we go down to the 5-minute, right, the insufficiency, there's still some below that. So even though we did fill most of it, now we can shrink it down to the 5-minute, and we can even sit here and look at that from that perspective. But then now we look left to get right. So what we can also see is there's equal lows here. We look to the left, this was the low of yesterday. So what does that
Yeah.
mean? The low of yesterday. There's going to be a lot more liquidity sitting there because highs and lows of like when you trade, most of the time you're on an hourly, 1 hour, 4 hour, but it's like when you're taking trades on like the daily, weekly perspective, like sometimes we're gonna go up, 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 and then within 2 days we drop, and then within the next 2 days we're even higher than we were before. And basically, what that would be will be us kind of capturing the liquidity of previous days. So let's say, for example, we're bullish on gold. So that means we go up 100 points today, then tomorrow the day opens, we go up 200, then the day after we go up 400. Basically,
Mhm.
that means that we had 3 consecutive bullish days where it's like, okay, basically you could have just bought it and you could have been winning. So now probably the next day what you're going to end up seeing is if not like a 50% retracement, you're going to see like a significant retracement that starts, and then the next day you'll
Yeah.
probably see another retracement, the next day you'll see another one, then maybe the next 2 3 days you see it start to fly again. So looking at this from this perspective, it's like you could have even taken it right off of the 5-minute, and it's like structure, right? What we pay attention to is structure. So realistically, what we would have had to see to validate any bias would be ideally a close above this structure. But notice how we failed to close above this. So even if you
Yeah.
missed, let's say that initial move, it's like now price came back into that same area, right? Let's say we were at 6 points now because we got in at an even better spot. We still targeting the same thing. Now we're able to catch
Yeah.
basically the same trade we just caught. We only caught a 1 to 6 last time, but now we're looking for a 1 to 11,
Yeah.
and then boom, right? What does price end up doing? Price
Yeah.
pushes all the way through, fills this insufficiency, but notice how this wick right here, right, it starts to attack some of these lows, but it doesn't quite run all of them. So the fact that we didn't, now immediately after, what I can see is, okay, 5-minute structure broke when we closed above this high. Now there's an insufficiency in my eyes all in here. There's a gap there too. So if we narrow it down to the 3 minute, ideally this is where I would kind of chalk my area down to in terms of like where the insufficiency lies. 1 minute, it's basically the same thing. So 3 minute to me is like as low as I'll go for really validation. But basically, what we'll really look to see is something like this, right? So stop below there. Ideally, looking to take it back up. And this is where price currently is. But notice what we're kind of doing right now, right? So we're creating this liquidity.
Yeah.
So on the 5 minute, it's a little bit more evident, but it still makes sense.
Vertical buys.
Yeah, right. Just because of the fact that we fill this insufficiency over here to the left.
Yeah.
Change this color. I'm gonna send that out to this quadro. So boom, basically we paid off that area. Now we have this insufficiency here. So what we could end up seeing is liquidity get ran. Us fill that insufficiency.
And then back up.
And then get that continuation back up. Because if we even look at this, from the perspective of now where the liquidity lies, right after that, that little bit of a dump. Now we can see something like this. So my eyes, now that's like a 1 to 11. Right, and it's like you could potentially get in with like a 10-point stop. You know, maybe like a 12-point stop. We get it to like a 12-point stop. That's about like a 1 to 12.
Wow.
So in terms of risk to reward, it definitely would make sense, but at the same time, like I said, it's just about like how price kind of reacts coming into that area. Because 15-minute wise, we broke structure too when we close above just this high. So to me, we have like the 15-minute insufficiency starts there, but like I said, I do want to see us kind of dig down a little bit deeper. But basically, the way that you could like position yourself would be something like this. So take a position kind of off that open area to make sure you get in, and then this would be like that sweet spot. Like boom, we fill this. That's where you get your either the rest of your position on, or it's like if that's the only position you're taking for the day, that's where it's like ideally, even if this is too tight of a stop loss, right? Let's say you put it down here. This is still a 1 to 7, so it still makes sense, right? And then this is like a 1 to 15. So it's like in terms of risk to reward, it makes sense. We have our target to the left, right? We have liquidity here. So overall, this seems like a solid setup. So this is kind of what I would look for in terms of like positioning myself into the market. I would kind of look for exactly what we see right here in terms of smaller time frame break of structure. 15-minute broke as well. That's that sweet spot we talked about in terms of structure breaking from the last call. So to me, this just seems like a good move overall. But when it comes down to insufficiencies, what I want you to do is go mark up a few charts and send me some, and basically I'll give you some feedback, and I'll start to like kind of like guide you where like what insufficiencies to pay attention to, because like I said, they have to be in alignment with basically everything else. But what I'll also send you is the recording from the other video. Just give me a little bit to chop it up, because I think I need to edit it and render it. So give me probably like 30 minutes, but I'll have it over to you probably within the hour. And then from there, what we can do is we can follow back up Thursday, or I guess it would be your Friday, right? Are you available on your Friday?
Yes, I am. What time though?
You tell me.
Okay. I finish work at 10, which would be your don't tell me I got this. Which would be your
You're trying to math too hard.
It would be 8. 8.
Whoa, you're a fucking genius. Look at you.
Thank you. But yeah, I can do then after work. That's all good with me. But yeah, our market closes a day before you guys, so
Yeah, that makes sense. So I'll definitely go ahead and I'll just make sure that you're Gucci. So Thursday or Friday, my Friday, your
oh, I know what you meant. It's okay.
my
It's
Thursday,
okay.
your Friday. Yeah.
I'm gonna do a habit share now.
Yeah, we need to.
Do we have so set days would be your Tuesday, my Wednesday?
Yeah.
Okay. I should.